Welcome to your Mortgage Insider Update for January the 6th. We're going to give you a quick update from the road. Let's take a look at the charts as we get started with the week ahead of the jobs report coming out on Friday, and otherwise a relatively quiet week into the end of this week and early next week when we start to see consumer price index and some more inflation numbers. Let's take a look. We can see the 10-year Treasury starts off the week at 4.6, almost 4.61%, up 1 basis point, still at an elevated level from the prior couple weeks through the holidays. And we can see that new highs since December, the week before Christmas, week before we got the PCE, the personal consumption expenditure, the last inflation report to come out was the Friday before Christmas. And then we've kind of hovered in the same range the last week or so, waiting for a breakout. Unfortunately, could go higher as far as rates. We could see a leveling off or lower rates into the future. A lot of this is going to be data dependent as the Federal Reserve has announced that they are going to back off on their total cuts to the future interest rates as far as 2025 goes, expecting 2 rate cuts as opposed to the original, like as of September, they had projected as many as 4 rate cuts in 2025, and that has been pared back in early December. And when they came out with that decision from the Federal Reserve, we can see interest rates elevated a little bit higher and are waiting on a decision before we see the next move. Working in inverse of the interest rates, the actual mortgage-backed securities, these are the security vehicles that are sold and to investors. As the price goes up on these, that actually nets the consumer slightly lower interest. But we can see that that has formed a very similar pattern to the 10-year Treasury, only in reverse. The price has been well depressed. Today, we're hovering just above this Fibonacci retracement level, waiting for some decision to either push pricing higher or prices higher on the mortgage-backed securities, which could mean lower interest rates. Just for the sake of showing this here, December the 18th, when the Federal Reserve came out with that announcement, the following day, significant fallout on the pricing to the investors. The no bids for the mortgage-backed securities, meaning that interest rates started much higher right then and have just been waiting for some kind of direction. So we start this week off, keeping an eye into the new year with a positive attitude and hopes for a future stability in rates before things can get much worse. We would have to see some significant inflation pressure higher. So far, it's been relatively tame. Inflation has not come down to the Fed's measure that they would like to see of 2%, hovering at around 2.7% on the PCE. That is not going to get us too many rate cuts unless we can see interest rates come down substantially. It'll be more of the same for 2025. Make it a great day.